Now that we get all these recordings in, then we're gonna figure out something to do with them. So right now they're just hanging out.
I'd love to be able to watch them.
Yeah, I know. I gotta actually like upload them somewhere. What do we want to talk about tonight, guys? We did this already. We've done that already. We've done that already. What do you guys want to learn about?
I do have a question.
What's up, Carrie?
Hi,
Hi, Carrie.
Hola, Carrie.
hola.
All right, Kyle, you got a question.
So earlier today, I know we haven't discussed it, the medical underwriting. I thought that was interesting because you brought it up earlier. Um, I was wondering in what situation do we use that and how do we go about figuring out if that's a good idea?
Ugh, this is a very slippery slope. So the medical underwriting, can we scoot you over? Because I'm gonna end up probably using that. Um, it's good to know how it works. It's good to know when to use it. It should never be the default. So, like, you can only do. I mean, I've started using medical underwriting as a defensive thing because the medical underwriting you can get like the best policy. You can get the lowest cost, like the best programs. You can get the highest amount of coverage, like pretty much advanced markets, wealthier people. Medical underwriting is the way to go. The simplified issue is middle America, nothing custom. It's quick, easy, and that is your source of cash flow because medical underwriting takes 2 or 3 months to get done. You only ever do a medical underwrite with a simplified issue policy to start with. So if anyone's ever heard me present a medical underwritten policy, I always say we do this in 2 steps. First, we have to put a safety net in place because if anything happens to your health, blah, blah, blah. But really, the purpose of us putting the safety net in place is so that we get paid today. We lock the person into something so they're committed. And then that way, a million and one things can happen with medical underwriting, but at least we already got some business done. So the only instance that you'll use medical underwriting is if simplified issue isn't available for them, meaning somebody got diagnosed with diabetes at age 30 and they don't qualify for simplified issue, or somebody has some one weird thing in their medical records. They had breast cancer a couple of years ago, but it was like really small. They caught it really early, and surgery was one and done. Like one-off things like that, medical underwriting can be really useful. Or if you have a higher net worth person that has money to spend and they've got a larger objective, medical underwriting is good. Or if you have somebody that already got a simplified issue policy, they already got like a Mutual of Omaha IUL. What are you going to do for that person? You can go medical underwriting. You can beat whatever the simplified issue product was with a medical underwrite. So those are the only real instances that we do that. It's way more complex and it's a fuck ton more work. So I really don't encourage it unless you're like really ready to go do that. But if you don't have simplified issue down yet, I wouldn't even worry about it. So if you have one, if you ever get someone where you're like, hey, I think this might be a good medically underwritten case, then you're going to send it to me and we're going to split it because I don't want you guys doing medically underwritten until you've been 6 months in the business. Once you've been 6 months in the business, you want to go do medically underwritten, like power to you, maybe even 4 months. But like figure out, learn how to do 20, 30, 40 grand a month on simplified issue first and get really good at that. And then we'll talk about medical underwriting and how to make that a part of your business strategy. But first things first, it's like focus on the easy shit and then bring those cases to me. And like if we can do a medical underwrite, I'll talk to the client and I'll do it. But otherwise, just focus on simplified issue. Because you can get lost in the weeds on medical underwriting, and like it really is a completely different animal. And it's like simplified issue is already hard enough to learn. Like there's already so much nuance. Like Kyle, you should be focused on, and all of you should be focused on learning the script, learning to close, learning the carrier underwriting guidelines for simplified issue before you start worrying about medical underwriting because it's a completely different animal.
Can I throw something out there?
Yeah, yeah.
So I had a mentor in sales many years ago, And he said there's two types of salespeople. There's you set the fly catcher, the flies fly through. Then there's the guys that move the fly catcher around. But when you're new, it's this. Because if you try to move it around, you'll miss all the easy ones.
And you just overcomplicate it. It's like until you understand simplified issue is the simpler form of life insurance. And so and that in and of itself is already like somewhat complex. There's a ton of nuance. Every carrier does things a little differently. It's a mess, right? Medical underwriting is then a whole other layer of several layers of complexity beyond that. So I just don't want you guys getting lost. And no one does medical underwriting in Pinnacle, so it will be a competitive advantage. And I'm here to support you with it. So if you have a case and you bring it to me and I'm like, yeah, okay, let's do a medical underwrite on this, then I'll help you with that. But otherwise, I just wouldn't worry about getting lost in the sauce. Yeah, focus on the building blocks first, and then we'll get to that. But it's kind of interesting because it was like medical underwriting was how life insurance has always worked up until like 7 or 8 years ago. Yeah. But then you got to understand risk classifications, and it's more work because you got to call the carrier and ask for a risk rating. The application is different. The process is different. There's more shit to manage. It's a lot more back and forth with a client. Like it's a lot of work. It's a lot more work. So yeah, I really wouldn't worry about that. Matt, I don't know if you're raising your hand.
I was raising my hand and we want to. So for underwriting purposes, this might answer the question, but insurance toolkits, it's like 80% accurate.
It's good for FEX.
Good for FEX.
So
okay.
Yeah, so just a quick recap. So there's 3 products. Actually, this is what we can go through. CJ, you're supposed to remind me of this.
You want to write or
No, all right. Yeah, I'm recording.
Oh yeah.
No, all right.
Oh,
we were gonna go
Chris?
through client nuance. That's what we were gonna go through.
Yeah.
You and I were talking about it last night.
I forget. I was thinking something else.
What was the question? Oh yeah, carrier underwriting.
Underwriting, what are the nuances? Yep.
Okay. So we only have 4-ish products. Okay. So you've got final expense, also known as FEX. This is whole life. Okay. You've got IUL, Index Universal, Index Universal Life. You've got term. Pretty simple as term. And then you have accidental death or AD. And those are the 3 things that we have at our disposal to create a plan for somebody. Toolkits is really good with these 2, and it's terrible with that. Toolkits only quotes Mutual of Omaha. So you can't rely on Toolkits for Index Universal. You can only use it for FEX and whole life. And even then it's not FEX and term. And even then it's not accurate. So what do? So you have the carrier underwriting guidelines. You have, I have a bunch of them that I need to upload. We have the underwriting cheat sheet, which you can literally open that cheat sheet, click on the tab, scroll down, find the condition, see what carriers will do about it. You'll start to notice trends. You'll start to notice that if they've had any major medical conditions, heart attack, stroke, mini stroke within the last 2 years, that's going to be an issue. If they've got hospitalization, that's going to be an issue. So I think about whole life has a 2-year look back. Universal Life has a 10-year look back. Meaning Universal Life cares about what happened over the last 10 years or ever in the case of Mutual of Omaha, whereas final expense really and whole life really only care about the last 2 years. Does that make sense? Things that happened before that usually can be okay. Make sense? Okay. CJ and I were talking about this last night. We were talking about all of the different kind of client, like the client archetypes. And we have talked about there's client frames in the system, and does everybody know the client frames? What those are? Yes?
Yeah. Spousal.
Yeah. So
continuity.
There are 4 client frames in the system, and those 4 client frames have meaningful, the script changes based on what client frame you have selected. The client frame will auto select if you fill out the beneficiary section. If you don't do that, it's not going to auto select, and then you're going to shortchange yourself on the content that's available to help you with scripting and question asking. This question, why did this question come up with us last night? What were we talking about?
Different, we already, the archetypes or something.
Yeah, but why were we talking about that? I don't even remember. Anyways, we were kind of going over that, like, there's only so many conversations we can have, and there's only so many things we can do for somebody, right? Like, these are the four products that we have, and then we really only have like 4 or 5 solutions. We have 4 solutions. We have pay off, right? We've got pay for, and we've got pay down. And then one variation of pay for is a bridge, an income bridge. And that's it. You heard the income bridge today. Yeah, it's going to take 3 to 6 months for these things to transfer over. So we need to provide a bridge to go from loss, income has transferred, Social Security's transferred, VA benefits transferred, and then after that, the income's good. So these are really only the 4 solutions that we have. So then the question that CJ was asking last night is like, how do I know what to do for each person? Like, how do we think about that? So I said, well, this would be a really good training. We can sit and talk through what are the client archetypes and the various kind of, or the variations of those client archetypes. So no matter what, okay, we're going to have man, woman, right? So we have either individual, single, or we have a joint household. That's it. It's really only those 2. Now, within single, you have single like inheritance, meaning they want to pass it to their kids. You have single cares about a family member, right? This is housing continuity. We have single who cares about a care continuity or care dependency. And what else? Who can think of anything else that exists there? Like, what if you're single, if you talk to a single person, who else are they going to try to protect it for? They're either protecting it for their kids, a family member, or a variation of either of those where you have a child or a family member with a disability. I think that's pretty much it, right?
Yeah.
You have joint, now you get all of these because you could have, they also care about inheritance. Most common is they care about protecting each other, right? Which is spousal care. They care about they could be both spouses and they also have a child dependent or a spousal dependent. And that's pretty much it. Like if you have a husband, if you find out that the beneficiary is married or that the applicant's married, they're probably not worried about housing continuity. Housing continuity gets folded into spousal support, right? They might be worried about inheritance, but most likely, if it's joint, they primarily care about protecting the spouse. And that's it. So you have joint spouse, because this one isn't all that common. Or you have joint and care dependency. And that's it. If they're single, there's only 3. So there's like 5 potential clients that you could talk to. I think we were rattling off more than that last night, though, weren't we?
Mm-hmm.
What else were we coming up with? Were you like writing it down? I thought you were taking notes.
Yeah, I reported it too, I think.
So the question becomes like, okay, well, what do we do for each one of these? So let's go through them one by one. Okay, so let's go single applicant inheritance frame. What do we do?
I was thinking, one of the things I learned from you that changed and helped me a lot was that, a child gets, their grief lasts maybe 9 months on average.
Yeah, not even.
And not even. So it's, you can design a case around that.
Okay, that's a really good call out. Let's make a note of that. So what?
It's a really good one for me.
What do we know about single inheritance? Okay, about this archetype of client. Well, you guys can't see that, can you?
I can see.
Can
You're good.
you see that? Is that any better?
It's a bit more legible, yeah.
Maybe a little bit. Sorry.
I think it was exactly this that we're talking about.
Can you guys see that? Is that legible?
Yeah, that's good.
It's a little better. Okay. So we have single inheritance. What are the things that we know? One, we know that the kids, shorter grieving process. Shorter grieving. In fact, it's really not 9 months. It could be 3 months or 6 months, right? So if we find out that we have a single applicant and they care about inheritance for their kids, we know that we only need a grieving period of 3 to 6 months. And if we compare that to joint spouse, grieving is 12 to 24 months. Okay, what else do we know?
The kids usually sell the house
Why do the kids usually sell the house? How do we know that?
because they tend to live somewhere else.
Depends if they have the house or not, or they live there.
It depends. So it's not necessarily that they usually sell the house. What matters is it one kid, or
Oh, yeah.
multiple kids? That's what matters, right? If it's one kid, we don't know if he's going to sell the house. He might rent it. And what if the kid doesn't own his house? If this kid's renting, he's probably going to move in, right? So these start to branch like this, and this one frame starts to branch. We end up here, and then we say, so we know this to be true, but then it's like, okay, this is one branch. We go, I don't have well, whatever. We get one kid, multiple kids. So we get a branch. Oh yeah, that'd be helpful. Thank
I'm
you.
blocked in, so
we got one kid or multiple
two
kids.
attached.
If it's one kid, this branches again. Okay, home ownership, whatever, or rent. If they own their home, then if they own their home, what are they going to do with the house?
Sell it or rent it.
They'll sell it or rent it. That's it. So we know that, okay, sell, rent. But they're probably not going to move into it because they have a home. But here, if they're renting, what does that mean?
They might move in.
They might move in. Yeah. But you know what they're probably not going to do? Probably not going to rent it out. Right? They're probably either going to move into it, move in, or they'll sell it and buy something they want. Like that's it. So, but if it's multiple kids, how does this change?
Well,
Two opinions, two people trying to figure out what to do.
We got multiple opinions trying to figure out what to do. What are the complexities of having multiple kids involved in this decision making?
Too many cooks in the kitchen.
A lot of cooks in the kitchen. So
Yeah.
parents will think like, right, there's only 3 options. It's like they're either going to sell it, they're going to rent it, or they're going to move into it. Okay. So, yeah, we're going to take this over. Is it this one? Well,
Yeah. Nope, the other way.
Oh, it's this way?
Yeah.
Wow, that's crazy. That's really cool.
Magnetic, yeah.
Okay, so in this instance, we have sell, rent, or move in. Those are the only 3 options the kids have. If it's one kid, that's easy. It's like, okay, do they own the home or not? If they don't own the home, they're going to move into it or they're going to sell it. Either way, they're going to need some time. If they're going to rent it, this gets a little trickier. Okay, but if it's multiple kids, that kind of takes these off of the table. Right? Because
Yeah.
multiple kids, if one kid wants to move in, they're going to have to move in. They're going to have to refinance the house and pay the other 2 kids off. They're not going to rent it because although renting might sound like a good idea, if there's multiple kids, one of them is going to have to be the property manager. Right now, are they going to split it evenly and then one just gets assigned the responsibility of being the property manager? That's going to create a rift, right? So, because someone's got to respond to the broken water heater at 2 a.m. Someone's got to respond to the tenant that doesn't pay the rent. Someone's got to respond to all those issues that can come along with renting the house. So
Yeah.
in most cases, if they got multiple kids and they're like, well, and what are the kids playing? What's the plan with the house? Oh, well, I think they're going to rent it out. Yeah. And which of the 3 kids is going to be responsible for actually being the property manager? Are they going to split it 50-50? Or is it going to be like a 70-30 relationship? Have they figured that out? The reason I'm asking these questions is because this is the kind of thing that goes unthought about that causes a rift in the family. Right? Our parents pass, we have this asset, and my brother and I can't agree on how this is going to be managed. And so the easiest thing for the kids to do is sell it. That's the easiest. So if they got multiple kids, we start guiding them towards the kids are going to sell the house. More often than not, the kids are going to sell it. If the kids are going to sell it, that makes our job really easy. Does that make sense? You guys try?
Yeah.
Okay. What do we do if they're going to sell the house?
Just need money.
Cover it for long enough to get the house ready to be sold.
We just go through a simple case design. The only difference is we know that the grieving period is shorter. So the kids probably only need a year, right? We know 4 months of that is going to be selling the home. 2 months of it's going to be preparing the home. So that means 6 months grieving, 6 months to prep and sell. 1 year mortgage payments, that's all they need. But we know they also need money to put in the home, money to take care of emergencies, money to handle moving and staging and all the other stuff. So we just, okay, cool. Multiple kids, they're going to sell the house. We go straight to case design. Boom. We know how to do that. Right? All those things are there for case design. If it's 1 kid, okay, do they own or do they rent? Oh, they own. Okay, well then they're gonna sell it or they're gonna rent it out. Sell it, we've covered. But let's go back to rent. How do we handle the kid that wants to rent the house out? How do we handle that?
Well, he
You're either going to cover it for a length of.
Chris, I know you can't hear him, but go ahead.
Sorry.
Chris was first. I'm gonna just raise your hand. I'm gonna call on people. That way we don't talk over each other.
Wants to rent the house probably needs 12 months worth of mortgage payments as well, because let's say grieving 6 months, and then
Okay.
they're gonna have to move out all the stuff. That's gonna take some time.
Okay, so Chris believes the kids need mortgage payments. And what else?
Well, they need money to move out the stuff,
Okay, we need travel and moving.
and then it's not gonna rent out right away. It's gonna sit on the market for maybe for a month, 2, maybe 3,
Covered in mortgage payments, okay.
and then fix up the home a bit.
Fix up the home, yeah, nailed it.
I
And then
agree.
don't forget about final expenses, right?
Right.
But let's assume for the purposes of this exercise, they got that covered. Okay. So Chris believes that if the kid is gonna rent the home, we need to cover mortgage payments for a period of time. We need to cover money for the kids to be able to move the stuff out, rent the storage unit, get the U-Haul, and we need to cover money to fix it up. What else? Is that it?
Storage.
Storage and kind of in travel and moving. Yep. Okay. What else?
A rental company, like if you're gonna use a rental company to promote it, market it, manage it.
Yeah. So, okay. So if you're going to hire a property management, most of the time they don't charge that up front. That just comes out of the rental agreement. They get a percentage of the rent. Who here's rented a house before?
We just did this exact thing in Hawaii with the mother-in-law's condo that we bought. We had to go there, take everything out of it, put it in storage. We rented it for a year. We had to take 2 different flights to Hawaii, hire a property manager, and then the cost of, you're not working, you're not.
Yeah.
It was just expensive.
It's a business venture, right? Ultimately, renting a house is running a business.
And then 4 or 5
Mhm.
things wrong with the condo that we didn't know about after the fact.
This
Once
is
they moved
what
in.
Greg's touching on here. When it comes with renting a house, you have a responsibility to the renter. And how many a myriad of things can go wrong when we rent a house out?
We need screens. We're like, you're on the 18th floor. There's no bugs, never have been.
We
want them, and they're legally
Emergency.
required.
Yeah, you need an operating fund.
Right.
That's what you need. Like you need an operating account because you're running a business when you rent it. And this is not something we've talked about, so I didn't really expect anybody to come up with that. But if you're going to rent a house out, You got to have an operating budget. Because what if some shit goes wrong? If they don't have the money in the bank to fix it, that turns a blessing into a nightmare really fucking quick. Right? Any landlord will tell you that, yeah, some years their rentals shit goes wrong. Stuff breaks, stuff doesn't work. They got to hire a contractor to come out and fix whatever, and it zaps all their profit in the house. Like roofs got to be replaced, windows got to be replaced, appliances wear out, and renters don't care. Renters say, fuck you, fix it. I'm paying rent.
Mhm.
Fix it.
Property managers don't care because they typically won't fix the water heater. They'll just replace it and you would have fixed it if you
Yeah.
were there.
And they're going to charge you for it too.
Correct.
Yeah.
And they add 10% on to whatever
That's right.
it costs.
What no one has mentioned yet is what if the mortgage payment isn't covered by the rent? What if the mortgage balance on this property is too high that rent won't cover it? What then?
Yeah.
There's a gap, it doesn't pencil. So
Well, it depends, right? But this is where we can solve this issue. If they say, well, no, he's going to rent it out. Like, oh, this is going to be an income producing property. Then that gives us an opportunity to say, okay, you sound really confident in that. It sounds like we want this to be an income producing property. So this will kind of be a part to ensure your son or daughter's inheritance. So now this goes from just being a kind of pay for structure, and we start looking at a pay down structure, right?
Hmm.
We add this into this, depending on what the mortgage payment is versus what average rent rate is in the area.
Yeah.
Then we can look at it and we can say, okay, well, the mortgage is 300,000 or 400,000 today. What's the average rent rate in the area? Oh shit, yeah, that's going to be breaking even at best. No one's going to want to rent the house out of its break even. So if this is really something that you want, these are the things we have to consider that come along with rental. Anytime we're going to go rent a house out, that thing has to be damn near brand new, or it's not going to rent.
Yep.
Right?
The condo cost us 30,000 in a month
Just to get it ready.
just to get it ready.
Yeah. 30,000 in a month.
Because you have to think like the mother-in-law was there from 1992 to 2025.
Yeah.
I have something to add with this is I have tenants at my house right now and they're wonderful. It's my family, my wife's parents. But when my water heater went out, because I had bought this house in 2015 and the water heater was from 2012, they had to do additional work to bring it up to what's current code. So my water heater was an extra $1,000 because they couldn't install one as it was. They had to install additional pieces to make it code.
So the purpose of this, guys, is like you have to understand what the implications are of what the client is telling you. And if you haven't had direct experience with it or you haven't sat down and thought about it, that can be hard to understand. And so if we're uneducated on this topic, we're going to say, oh, okay, I don't know what to do. Right? So the purpose of us going through this is if you come across this, hopefully you've been taking notes and you know what to do. You say, okay, cool. So with regards to renting it, it sounds like you're pretty confident in that, and that's what you want to have happen. So there's a few things we need to think about in this. And we kind of still go back to case design. But you say, first things first is we are going to look at what is the mortgage likely to be and what's the average rent rate in the area. Do we need to pay down the mortgage in order to make it profitable, or is it already going to be there? And maybe they want to pay down the mortgage to make it more profitable for their kid. So that's one way that we can upsell, especially if they're healthy and have money. Second thing is we're going to have to cover the mortgage payments for the grieving period, also for the fixing up period, and then the marketing period for renting. We're going to have to cover the storage unit, the U-Haul, the movers, all the stuff it's going to take to get everything out of the house and rental ready. We're going to have to cover fixing it up. And then we're also going to have to cover an operating budget, or at least an operating account that there are some funds in, so that if something goes sideways or there's something unaccounted for, your son or daughter has money there to handle it without it becoming a financial nightmare and a stressor for them, right? The whole purpose of this is to be a burden, not a blessing, right? So these are the things that we have to cover.
a blessing, not a burden.
A blessing, not a burden. Yeah, thank you. Right, so does that make sense?
Yeah.
Okay.
So question
Yeah.
I run into a lot is when I start talking to them about updating, they tend to just say, Oh no, it's updated. It's good. It's perfect.
They always say that.
And
Oh,
I'm thinking to
perfect.
myself, there's no way. I mean, I've talked to 10 people in a row who say that. Have you found a way around that?
Yeah, 100%.
Okay. So which
I say that about my house.
What's the way around it? Who has an idea? How would you get around that? CJ, how'd you get around
What
that?
do you ask?
He asked the person, well, what about funds to improve the home, get it ready for market or ready for rent?
It's already perfect.
And the client says, oh, I don't need that. It's already perfect.
What if the hot water hot water heater breaks?
Okay, what if scenario?
Okay. What?
Well, that's one way to handle it. The other way to handle it is like, I totally understand that today, right? But have you gone into a home that was built in the 90s here in the 2000s? How out of date? And what about have you ever gone into a home where you can tell this person's lived there for 20 years and hasn't updated it because it's perfect for them? It's perfect for their style. My point is that we don't have a crystal ball. We don't know when this day is going to come. And yeah, if that day came tomorrow, it sounds like the house is ready to go. But what if that day is 15 years from now when both of you are in your 80s and you haven't kept up with the home the way that you do today because maybe some health conditions or mobility issues or it's comfortable just the way you like it and you don't want to change it. But market trends are different. And they'll say, "Oh yeah, okay, that's a good point."
Well,
Yeah, so
Perfect.
project into the future, right? It's not happening today. You're not going to die tomorrow. We don't know when that day is going to come. We don't know if it's going to be a buyer's market or a seller's market. We don't know if that's going to be in 5, 10, or 20 years. We don't know. And we also don't know what it's going to be that takes you out. Like, we don't know if it's going to be something that changes your mobility and now we got to install all kinds of things in the home just so that it's mobile, it's friendly to your mobility. We don't know. And so the point is that if we're wanting to rent the house out, there are considerations that we have to think about in order to make sure that your family has the funds and resources, also given that we don't know the financial state of where they're going to be when that time comes. And that's the purpose for us doing this, is that we have a bulletproof plan. We got a plan that says it's future proof. Doesn't matter what happened, we've thought through it and we've created something that will be there and it's going to work. Make sense? Okay.
Yeah.
So we can see that single inheritance branches a bunch of different ways. Right now, I'm not expecting you to know all of that, but what I am expecting you to know that, hey, if they're going to sell it, that's pretty straightforward. We talk about that all the time. That's going to be the case most of the time, right? But if they want to rent it, that's a little more complicated. If they want to move into it, then the question becomes like, okay, what's the financial wherewithal of your kid? He's renting today. And most of the time, the actual mortgage payment will be cheaper than rent because of where the rental markets are at. So then it's really just a matter of covering the mortgage payments to give them time to grieve and doing something nice for them so they can afford to move out of their home and into that home. And if they're renting a home today, they got to wait. What if they got to wait till the lease is up? All of those things, then hire the moving company and do all that stuff. They still got to do all that, right? So there's still cost there. It's just a matter of understanding what those costs are going to be. Make sense? Okay.
Mhm.
Any questions on this?
Yeah, a lot of times people will say, "Oh, my kid makes plenty of money; they can just pay for the mortgage, no problem."
Yeah, great. And do you want them to pay for the mortgage? Like, why why are we here? So they can pay for the mortgage. That's fantastic. You must be very proud. Why are we having this conversation?
I've been starting to ask people that more and more.
Oh no, they got plenty of money. They can pay for the mortgage. Okay, cool. And do you want them to pay for the mortgage? Do you want them to pay for it, or do you want to cover it for them? If you want them to pay for it, what are we here talking about? Like, why are we here? They may say, "Well, fuck, I don't know why we're here." Okay, well, you're respectfully. If you don't know why we're here, I don't either.
It would cost to pay off the mortgage.
Okay, yeah. Well, I can certainly help you with that. Why do we need to pay off the mortgage if the kids can afford it just fine? I'm actually going to try to sell them out of it. The second you tell me you don't know why we're here, I'm going to be like, then why the fuck are we wasting our time? I'm going to try to sell you out of talking to me because I don't want to waste my time with somebody who's not a buyer. If you're shopping, then I'm going to say, okay, cool. I can certainly help you understand costs. Help me understand why we want to pay the mortgage off. You just said your kids could afford it just fine. Like, why do we want to pay it off? That's going to be a financial drain on you for a benefit.
See how much it costs.
You just want to see how much it costs? Okay. Have you gone and looked online and looked at any of the calculators?
No.
No? Okay.
I just clicked on that.
Okay. And what is it that you want to see how much it costs?
see if I can afford it,
Afford what?
pay off the mortgage.
Why do we want to pay off the mortgage?
So
Like, why is that interesting to you? You see, I'm going to bring it back to that. Why is it interesting to you? I understand that you want the cost, and I want to help you with that, but I also want to understand, why is that important to you? Like, what's the point of even spending the time to look and see how much it costs? Why is it important to you enough to even go have this conversation? You can push them a little bit. And frankly, if someone's not willing to give me that, I'm going to say, hey, listen, at the end of the day, I don't think I'm the right advisor for you. I'm like actually here to help you create a plan. If you want to go price shopping, there's a bunch of places you can go online and you can do that in a couple clicks. But I'm here to help families and make sure that their family and assets are protected. If that's not what you want, totally get it. I'm just probably not the right advisor for you. I'm not going to waste my time. I'm not going to spend an hour with somebody on the phone for nothing. My time is valuable, as is all of yours. So qualify your client for sure.
So if the client says, you know, I just want to pay off the mortgage, my kids can afford the mortgage payment just fine. Okay, well, why are we here?
Not necessarily why are we here, and it's not to be abrasive. Like, I'm not going to say, okay, well, fuck you, why are we here? Like,
well, yeah, I wouldn't say it like that, but
yeah, but instead I'm going to say, like, okay, great. So the kid sounds like so it's great to hear we don't have a risk of foreclosure. But tell me why do you want to pay off the mortgage for them? Like, why? Well, and most of the time they're not gonna say, well, I just want to know how much it costs. If you get that person, dude, fire that client. If they're not going to open up to you and actually work with you, they're wasting your time. Honestly. So, but if you get that client, I'd say, okay, great. And why do you want to pay off the mortgage? If the kids can afford it just fine, why do you want to pay it off? Well, they're going to come up with some response and say, okay, well, is it worth it for you to give that gift to them? Like, do they have other inheritance that they're going to receive, or is this it? And are you just trying to build up the financial value of your estate to the kids? Tell me what you're wanting to do, and I can help guide you towards that, the most ideal outcome that's most cost effective and beneficial for the family. Okay, any other questions on this though? So we don't get too far off track. No? Everybody got this? Chris, you committed to memory?
take a picture of it.
Okay, so you're not taking no notes, so I want to make sure you're getting it. We do
I
have the
took a
recording.
photo.
I will make it available. We'll also have a transcript.
I do appreciate you surfacing that, because I do recall having a discussion with a client and they were like, yep, the kids already have discussed it. They're going to rent the house. And I was like, good for them. And
I'm just gonna start poking holes. Like, our job is to poke holes in their plan.
Right.
Right. Everybody's got some sort of plan. Well, I don't know. She's gonna pay the house. She's gonna sell the house. Well, I don't know. She's just gonna move on to the corner, I guess. Like, I don't know. Everybody's got a plan. Our job is to poke holes in that plan, show them the weaknesses of it. Well, yeah, no, the kids are gonna rent it out. Okay, cool. And which one's gonna be the property manager? Like, which one's gonna take the call? The weakness there is if they say, well, no, none of them are going to be the property manager. They're going to hire a property manager, and that property manager is then going to handle all that. And then I'm going to say, okay, and which one's going to interface with the property manager? Who's going to be actually the business manager for this little venture? Okay, cool. And is that person getting more than the other two? Well, I don't know. Okay, well, the reason I asked is because I'm sure the last thing that you want for your family is some conflict that's going to kind of push the kids apart. And business things like this, especially amongst family members, they have a tendency of doing that. Right?
Oh, 100%.
Yeah.
Just name the executor for your trust to one family member. Yeah, all the family members. Yeah.
Simple things are hard things are
Okay, did you get it?
simple.
Okay. Okay, so that is single inheritance, and you can see like there's quite a few variations there that we have to understand and consider. All right, what's next? Let's go to, which one do you guys want to talk about? Like, what's next for you guys? We just did single inheritance. Done.
I would love to go over single child dependent.
Single child dependent, great. We just did this, so
yeah,
it's fresh.
but I've had a few of them, and then they come back, and it's like we go deep into the why. It's so important. I find something that's at or around $100 a month, and they can't afford it, even though they've just like.
Okay, so care dependent.
What exactly is single child dependent? Is that just someone who's younger?
It's single with a care dependency.
Okay, this is care dependency. Okay.
Care dependency.
Like Cindy earlier.
Yes.
Like a single mom.
No,
No.
not single mom. Care dependency is
This is
child.
my mother-in-law with my sister-in-law who had a stroke at 64 and lives with her now.
This is, yeah, it's
Mm.
child, grandchild. It can also be brother, sister. Okay, that's why it's not child dependent, it's care dependent. What that means is that this person is not capable of taking care of themselves. I'm not gonna write all that out. They're not capable of taking care of themselves. So you got a spouse that's in a wheelchair that she can't get around the house, right? She needs assistance with activities of daily living. You have a grandson or a child that has autism or some other, I don't know, disability, right? They can't take care of themselves. They are not of the mental capacity to make financial decisions on their own behalf. They need somebody as a guardian, right? Now that if that is the scenario, the way you surface it is like, okay, so if we never had this conversation, is there somebody else that will step in and take care of that person? Who else will provide the care? If it happens to be an autism scenario, I don't know how familiar you guys are with autism, but for individuals with autism, a change in their environment can be extraordinarily difficult, not just for them, but for everyone involved.
Mhm.
Like sudden changes to their routine or their comfort can create massive interruption in living. So, does that kind of answer your question? So then the question becomes like, okay, and what's the, now, are they working? Are they capable of working? Oh, no, they're on Social Security disability. Okay. And if we fast forward 10 years down the road, if you're not here, can they take care of themselves or does someone need to be involved to provide that care? Well, someone need to be involved to provide that care. Or if they can take care of themselves, then you just uncover that it's really not a care dependency. It's really they're kind of saying that, yeah, they got a disability, but they're capable of taking care of themselves. I take care of them now because that's just how it worked out. Or if they've got an adult child living with them, it may not be a care dependency. That adult child may be able-bodied. So I usually say like, okay, and are they living with you because of a care dependency, or are they like able-bodied and they're just going through like a transitionary time, or they're just there to support you? We want to understand, like, can that child take care of themselves or not? Can that person that's going to stay in the home, is it actually a dependency, or is it something a little less? If it's actually a dependency, I have not met a parent that will not move heaven and earth.
Fucking Martha Emerson.
Okay, so we would need to go and like really dig into that conversation, understand what happened. Some of them, it's like I said, I just haven't run into a scenario where it's a true care dependency and they wouldn't do anything and everything they could to take care of their kid. Although every parent's a little different. Some parents, maybe they just don't give a fuck. I don't know.
She like gives a fuck, but like not apparently. Like she went on and on about how she buys expensive water.
Okay. So in this is what we were going through last night on Cynthia's case. In this, the goal is typically to pay off the house. Pay off. That's the goal in most cases. Because they cannot make the decisions on their own. They do not have the capacity to go list the home and sell it on their own. And then if they got to move, that creates a whole other world of issues if there's a true care dependency. So the goal is to pay off the house. If that is not possible because of a budgetary concern or budgetary or qualification restriction, budget or health, then we look at a way that we can pay down the mortgage, and it's kind of in this order. Pay down the mortgage to a level that the dependent can afford it on their own Social Security. Dependent can't afford it. Okay, so there's a couple things. When you have an adult dependent, and most often the adult is receiving Social Security disability. They might only be 24 years old, but they're still receiving Social Security disability. And so we want to find out what that is. And so like on the call with Cynthia last night, I was like, okay, and so I understand that your grandson is a resident dependent with a care dependency. She said, yeah. Oh, okay, great. And is he getting compensation from the state, or is it like Social Security disability? Is there money coming in? She says, yeah, he gets $1,000 a month. We didn't talk about that in the budget. It's like, yeah, we don't need it for the budget. What we need it for is to understand if we can't pay the house off because there's so much owed on it and you can't afford a policy that will actually pay this off, what do we need to pay it down to in order for that person to be able to afford to stay in the home? Right? So here, we need to understand taxes, insurance, their income, their SSI, well, SSD income. Okay, and then we need to understand, based on this, we can back into like you take SSD minus taxes minus insurance. That's going to leave us some amount, and then take that, and usually it's like this taxes, insurance plus principal and interest has to be less than 50% of SSD in order for them to qualify for a loan, because they're not going to get more than 50% debt to income ratio on that refi. Does that make sense? Sorry, that was like chicken scratch and a half. But this is what we need to understand. So if we're going to sell somebody on like, yeah, we're going to pay the, if you passed here, the mortgage balance will only be 50,000. Your taxes monthly are this. Your homeowner's insurance monthly is this. Based on 6% interest, the principal and interest payment on a $50,000 mortgage would be this. Combined together, that's this amount of money. They got this coming in. It's going to be tight, but it's doable. And if they get a roommate or they rent out another portion of the house or they do anything with the house, now we got a winning situation. And so this is a parent that wants to pay the house off, but really can't, has a budget restriction that's causing us to have to look at more creative ways that we can ultimately have the child safe and secure. What this whole thing is coming down to is it's never, none of these are ever about actually paying off the home. It's never about the payoff. That's just where everybody starts. Okay, this is a means to an end. The paying off the whole mortgage is a means to an end. It's not the end itself. Most of the time, the end itself is making sure that our loved ones are safe, secure, and protected. That our loved ones are going to be okay. Right? So when we define what okay is does okay mean he can stay in the home long term? He can stay there forever? Is that what okay means? Okay, let's figure out how we do that. Does that make sense?
Mm-hmm.
For the spouse, I want to pay the home off because I just want her to be okay. Okay could mean just making sure that stuff's paid for 2 years. Give her time to grieve and give her time to transition with grace. For the inheritance, okay could mean just make sure the kids have enough money to pay the mortgage payments, fix the house up, and get it on the market and sold. Right? So what they care about is never actually paying off the whole mortgage. What they care about is making sure that their family has the financial resources in order for them to be okay. So then we go define what okay is. That make sense?
Mm-hmm.
Yeah.
Okay, questions on this? This, by the way, is typically the strongest why, but you do have to flesh out, is it actually a care dependency? Or is it they just have somebody living with them and there's kind of like they could take care of themselves, they could be on their own, they're just choosing not to, or the parent is choosing to have them there.
Yeah. My gal was like, he cannot take care of himself. So that's why I remember it, because I couldn't believe it went sideways.
Yeah, I will say that something to be aware of with these is a lot of times the parent will say like they're down for $500 a month, and then they just won't answer the phone again. Like, so sometimes you end up in a situation where the parent wants it and they're going to say that because they have this vision of themselves being this, I will do anything for my kid. But when the rubber meets the road, the finances are just way too tight for them. And they don't want to admit that to you because it makes them feel like they're an irresponsible parent. And so they'll avoid it completely and just never answer the phone again. And so part of that then is also like, hey, listen, I know we want to take care of your son. There's other ways to do that also. Instead of paying the house off, can we identify somebody that we can name in a trust that will be their caretaker and make sure that person is compensated to handle the estate, sell the home, find them a new home that they can utilize that they can purchase with the equity in this home, and we're going to pay that person to handle that process. That's another way to do it, right? So it doesn't always have to be pay it off or pay it down. If this is too expensive, we have to think creatively about how we accomplish this goal, which is never about the payoff. It's always about the security of the family member. It's really about security. Does that make sense?
Yeah.
So then the question becomes like, okay, cool. If we can't pay it off, like how else can we offer security to that person? So I just gave one example. And this comes down to like creative thinking ability. How else can we take care of a resident dependent? If we can't pay the house off and they can't afford the mortgage, what else can we do?
We pay for.
Okay, we pay for the mortgage for some time. And then we use a third-party caretaker. We identify a trusted person or member of the family, a friend or something like that we can designate as the trustee. We can move the home into a trust. We can designate this in the trust that there will be a certain amount of money that's going to be there to pay the trustee to handle the care continuity of the dependent and also handle the housing situation. Sell the home, buy a new home for them, get them moved, find all the people that need to provide the care, and we pay that person a little bit of money.
Have you had have you had a situation like that happen?
Yeah.
Yeah.
Mhm.
Who found that person? Was it them or
It was the insured.
the insured?
Yeah, it was a guy down in Louisiana. His daughter was autistic. And so we were looking at it and like paying off the mortgage just wasn't going to happen. That just wasn't going to be a thing. And so we started like talking through it. I didn't have this as a solution, but he was like, I wonder if I could actually like have one of our family friends that's about her same age actually be this person for her. So if I'm not here, this will kind of be her guardian. And then that guardian can get this money and it'll be enough money for her to do what she needs to do to transition. Yeah.
I mean, in a case where someone has a child that has autism, they need to find like a guardian that will be like a caregiver, period, right? I mean, if they don't, then what, the kid with the autism is just going to be on its own and like figuring it like how they're going to figure out how to move forward.
Really good question. So now you're actually talking about going even further than this.
Ward of the state.
Like, okay, now can we actually add additional costs on and additional coverage amount so that it's not just about paying off the house, it's also about providing for a caretaker. Yeah, that's a really good insight. So yeah, that's 100% true. But I guess my point with thinking through all this is like if you sit down and think about what's actually trying to be accomplished, and I encourage you, do this work before you're on the phone with somebody. Like do it ahead of time so that you've got a mental map of how this shit works, where we can go, what we can do, what potential solutions are, so that when you get on the phone with that person, you're not like, well, yeah, I'm gonna have to get back to you on that. I don't know. You're gonna say, no, hey, you know what? I've seen this happen. And this is what some clients choose to do. This is how it can be handled. Now you're the expert, right? What time is it? Ha! Perfect.
Well, and if you're going to do this with like these questions, you have to find the disposition of the kids. Like, how many kids you got? 4. Okay, this one's dependent. What's the role of the other 3 kids? Which of your children do you trust the most?
That's right.
And you'll find like and then they'll always say, yeah, this kid's getting nothing. You'll hear that.
That's what
You have to
my
pay attention
husband
to it though.
said that. He's like,
Yeah.
my daughter
You
is
have to
selfish.
pay attention though, because there's issues inside the families that if you don't understand the dynamics, you might miss. Like we have 8 kids. Miley's got 4 siblings. Her mom has a huge estate. We deal with this constantly.
Yeah. Yeah, it's a really good point. I mean, I cannot pretend that I've got this all figured out because I don't have siblings and I haven't been through this personally. Yeah. This is just me thinking about it and then looking online and researching and seeking to understand the scenarios that people find themselves in so that I've got some level of education before I find myself on the call having no idea what I'm talking about. Yeah. You know what I mean?
Do you help them with the trust, like in that situation that you were talking about?
Yeah, 100%. Like we do now.
We do
But yeah, we do now. So yeah, we can help them with the trust. We can send them the link so they can go in and set up the trust. We can, they can pay the attorney through that site to actually customize the language, make sure everything's there. Yeah.
I mean, I guess if you don't really know what to do, is to just figure out like what is it going to mean for their beneficiary to be okay, right?
That's what it all. That's ultimately what everything boils down to. If there's anything that you take from this whole training, it's to understand the vision that they have for their family. Like that's first and foremost. So understand that whatever they're applying for, I want to pay the whole mortgage off. They don't give a fuck about paying off the mortgage. They care about that because they're trying to achieve some vision that they have for their family. And so if we can understand what that is, understand what they really care about, what they really want, then we can start to kind of back into what needs to be done in order to accomplish that. And a lot of times we can educate them that, yeah, hey, we don't actually have to pay the whole house off to make this happen. Right. The other thing that we skipped in like the inheritance piece is, listen, if the kids are going to sell the house, the only difference between paying the mortgage off and paying for it is how much the cash the kids are going to end up with at the end of the day. And if we really care about maximizing inheritance, let us talk about a couple other ways to do that. Got a really good guy in my office. His name's Dustin. He's our senior advisor. He would love to chat with you about how to maximize the value of your inheritance for your kids. That's what he does. Right? Because there's other cool ways that we can do that. But yeah, any questions? Otherwise, let's wrap it up. It's 8:00. Other things you guys want to talk about? Things that are coming up for you?
I have a random question, totally off topic.
Yeah.
Kat told me what my what the AP was today. Is there a chat that I'm not a part of that I don't know about?
What?
He doesn't know. He posted his KPIs, but he didn't post his deal. And so I said, hey, add your,
Oh, to our chat?
yeah. And
Yeah.
so,
You're in the
How did
Pinnacle Nation chat, right, Kyle?
No, I'm only in Pinnacle National Partners.
There you go.
Ooh.
You're missing. I swear you're in that chat.
No, I'm looking at it right now.
tag him and Kyle came up, but I didn't think it was.
Okay, I got you, Kyle.
Cool, thank you.
That's on me. My bad.
You're good.
I wanted to ask and see, is there going to be a recording of this meeting specifically? Because I did miss a bit of the beginning and the middle as well.
He's in Trevor's
Yeah.
meeting room.
Yeah, we did record it. Oh, why not a fucking admin?
Just
And
know,
then, is there anywhere?
it's
Go ahead.
the 06 is Dustin's meeting room on the Zoom, and the 02 is Travis or Trevor. Sorry.
Okay, thank you.
It's just a little number on the bottom.
I can't add people to this anymore. Oh, wait, here we go. Kyle. COTC. Dude, there we go. Okay. Everybody else is in the WhatsApp, right?
Mhm.
For the Pinnacle Nation WhatsApp? Okay.
Guess I was just the odd man out. There we go.
You were the odd man out.
Now
Add.
how it's done.
Not anymore, though.
Now you'll understand what I meant about the AP because Kyle, God bless him, Kyle was like, nobody else is doing it, and I was like, that's because nobody else told anything
Yesterday.
today. You
Oh
remember
wow, there's a lot here.
Still, that's why you didn't see the AP up there.
Possibility that she will be declined.
That what?
Cynthia,
What about her?
It's okay.
There's
Give it
a-
another
there's
couple
a great
months. We'll start looking
chance
like
that she
Trevor's.
will be declined because of that medication, right?
What's the point of surfacing that?
Well, Christian was asking me,
I didn't see it.
why,
I haven't checked that chat.
that we had a deal.
We did have a deal. No, we're gonna get it figured out. We're gonna go to Ethos, and we're gonna look at their IUL. We're gonna look at Emeritus IUL. We're gonna look at F&G's IUL. We're gonna figure this out. If not, we're gonna have her get off of that medication, and she's gonna get that policy. Believe that. Okay, that's it, guys. If there's nothing else you guys want to chat about, then let's break. Let's have a good night. Let's close out the week strong tomorrow.
Thank you.
Thank
you very
you.
much.
Bye.
Toodles.
Adios. Das vidania.